welcome back to another episode of Global Market Outlook with Punita Kumar-Sinha. Today we'll be discussing the aftermath of the US elections and how global markets have reacted to the election outcome. As you know, Punita is the chairperson of InCred AMC and has more than 25 years of experience in investment management and global financial markets. She's also on the board of several Indian corporates and the CFA Institute. Welcome, Punita.
Thank you, Chavi, for having me on the show.
So first off, we finally have a clear winner in President-elect Biden now. And even though he's been declared the winner after what happened at the battleground state of Georgia, Donald Trump still finds it very hard to concede the election. And his allies are still promoting a lot of conspiracy theories about voter fraud. There are still constant dialogue which is happening about, recounting of the votes. You are based in the US. How is the situation on the ground? Do you think people are happy with the outcome of the election?
Chavi, as we discussed in the last podcast, that there was a possibility of a dispute if President Trump didn't win the election. And we're seeing that dispute now as President Trump is challenging and is talking about voter fraud, etc. But I think slowly that dispute is not getting as much attention and it's fading away. And I do expect that Biden will be the president going forward and that President Trump will leave the White House. I think the mood, to your question, are people happy on the ground? Well, on the day of the election and the results, depending on where you live, if you're on the coasts like East Coast, there was just tremendous amount of celebration. There were like parties and celebrations everywhere. And if you are in states that were Republican, where the Republicans were winning, there was, the mood was quite pessimistic and there was no celebration at all. So I think the country is quite divided in that sense. I think you are seeing a polarized America where, the election was close. But at the moment, I think markets and everybody's expecting that Biden will be the president and the Democrats are going to be in power. Of course, we are seeing a divided House and possibly a divided Senate.
So despite the White House outcome now being favored of Biden, the Senate, as we know, still hangs in the balance. And the outcome of whether the Democrats or Republicans will take the Senate will be decided in a special election in Georgia. That will be held on January the 5th. Do you think it's still therefore early days for us to understand the impact on future policy making, may it be trade or foreign policy? As you know, we had mentioned in our last podcast to our viewers that a democratic approach to policy making will actually entail much more activism, be more liberal, and not really focus as much on America first.
No, you're right, Chavi. We are seeing a possibility of a divided Senate. But a divided House and a Senate is actually not being viewed that negatively by the markets, because the markets were really concerned that if Democrats came to power, that there could be an increase in corporate taxes and there could be an increase in long-term capital gains tax from 20 to 39%. But if there is a divided House and Senate, that means the bills will take longer to clear. And so some of these measures may not happen this year or even for some time to come. And therefore, I think it's not being viewed that negatively to have a divided House and a Senate. Also, it ensures more checks and balances in the system. So whether it was the Democrats or the Republicans gaining absolute power, that hasn't happened. And that always means that democratic procedures will create a debate and things will be happening in a more measured way. Now, in terms of America first, yes, I think Biden's views are different, as he's outlined also in his election manifestos. He is taking a more balanced view towards the world and towards foreign policy and also potentially on immigration, tariffs. At least that's the expectation right now. And so, as we had discussed in the last podcast, it is more positive for emerging markets and emerging economies to have the Democrats in power right now, because that means a more benign environment for foreign policy making.
The other interesting sort of development happening globally now is a rise in cases from a coronavirus perspective. How do you see the situation related to the pandemic panning out, especially with the vaccine rollout being around the corner?
It's interesting. While the mood has been quite optimistic on the election, and of course the event risk with the election being over, there is one less uncertainty in front of the markets. But COVID is still here. And in fact, the numbers are not looking good. I'm in Massachusetts right now, and the numbers here are almost as high, if not higher, than we saw in the summer, in the April, May, June kind of numbers. So the numbers have been rising. The numbers have been rising in many, many states in America. And so there is a lot of concern that, the second wave is happening and there is a surge happening. And some states are announcing again stringent measures, lockdowns are happening. So again, there is concern. We are not out of the woods. We are also seeing lockdowns in some European countries. We're seeing lockdowns in UK. So there are concerns there, and the global economy isn't functioning at the normal levels because of all of these dislocations that we are seeing. Now, in terms of the vaccine itself, there is optimism. In fact, there is hope that the vaccine could start getting distributed sometime later this year, just in a few weeks, the first doses. And starting next year, February, March, there is a lot of expectation of the vaccine being available. But if you see surveys of people, consumers and people who are being asked, are you going to take the vaccine? A number of them, the majority in fact, are saying they won't take the vaccine in a hurry because they're scared about the side effects. They're not yet confident about its efficacy. And so I think it's going to be challenging to find enough people to come forward to take the vaccine. The second challenge is of course, having enough vaccine for everybody. So there's going to be rationing that'll happen. And the policies around the rationing as to who's going to get the vaccine first and who's not going to get it are still being worked on. So even though there may be a vaccine, to get a population fully vaccinated is going to take at least a year, if not longer. So unless the pandemic slowly just loses its strength, there is obviously still concern that we are not going to be able to see a fully normal economy and a fully pandemic-free world.
I think this lays the foundation of a lot of context now, Punita. So let's come to how we think markets are reacting to these developments, both US elections as well as the pandemic. What are your thoughts?
Well, the markets seem to be ignoring the pandemic to some extent. They're as euphoric as ever. There's a lot of liquidity. There's been enough fiscal stimulus, and more is expected with Biden coming. There is hope that there'll be another round of stimulus relatively soon. Interest rates are low, and the earnings have begun to improve. So companies are now across the world, I mean, whether it's US or even India, a lot of companies now are back to operating at pre-COVID levels in terms of their sales. Demand has picked up. And so while unemployment is still high and there is concern around how soon the economies will totally recover, the stock markets are anticipating that we're going to be out of all of this within 6 months to a year. Even if you look at the IMF forecasts and the forecasts on the global economy from various sources, everybody's forecasting a very sharp increase in global GDP next year. So for instance, this year, the forecasts are for negative real GDP growth in most countries. For next year, the numbers that I'm seeing are very positive. For instance, in the US, I'm seeing numbers range between 4 to 6%. In India, I'm seeing numbers between 8 and 9 or 9.5% next year. And in some of the other Asian countries as well, you're seeing numbers that are almost as high as they've been in, because we are going to be seeing a recovery in terms of GDP growth. So earnings also, we are seeing some amount of earnings guidance being revised upwards by companies. They're also beginning to see things normalizing. The markets have been very positively impacted by all of this. And while there should be some concern with respect to the pandemic, at the moment, the markets are really believing that there's going to be a strong cyclical recovery in the global economy. And therefore, there has been a big shift into the cyclicals.
So in the last podcast pre-election, we got into some analysis on what sectors we thought would benefit from the elections, depending on which party came into power. When you read a lot of analyst reports which have come post-election, at least IT and healthcare seem to be the sectors which are finding most favor. What are your thoughts? Which sectors do you think will benefit the most in the current scenario?
So Chavi, in our last podcast, we had discussed that if the Democrats came to power and if the presidency goes to Biden, that there is going to be a shift in sector. And I think we have already seen that shift in the behavior of the markets and in the sectors over the last 3 weeks. So we had talked about the fact that if Biden comes to power, it'll be positive for emerging markets. And we are seeing a strong recovery in emerging markets. We also discussed that they, believe that the Democrats will spend a lot more on infrastructure, that we would see the cyclicals rally, which is in infrastructure, building materials, metals, and consumer discretionary. And we've seen those sectors actually recover more sharply. Healthcare, of course, remains a secular theme because everybody after this pandemic realizes the importance of healthcare as a sector. And so that's a secular theme. And while it may not be rising as sharply as it has earlier this year, it's showing steady growth. And there is a shift somewhat from technology into the cyclicals. There's a rotation going on. We're also seeing more money going into emerging markets. We've also seen, foreign institutional flows go more into India. And we've also seen, while we are seeing domestic mutual funds seeing outflows, we are seeing foreign institutional investors putting more money into India. We are also seeing a shift from growth stocks to value stocks, particularly in the US. So if you look at funds, the growth funds since the election are underperforming value funds and value strategies and more cyclical strategies. We're also seeing small caps and mid caps do better than large caps because, again, all of this is pointing to a recovery, an expectation of these growth numbers, the forecast that I discussed earlier, that things will be looking up, and therefore markets are anticipating that, and small and mid caps tend to do better in those kind of situations. And I think we're seeing that shift happening and that rotation happening not just in the US but also across the globe. Another, of course, shift we are seeing is that Europe is also beginning to look up. And while in the last 12 months or so, it's really been the US markets that have been leading. That lead of the US markets might not remain. We may see Europe, we may see emerging markets and some of the other markets do better. India could do better depending on how we see our own policy making and how handling of COVID. So I think there is definitely a shift, and this was all, I think, as we discussed in the last podcast, anticipated to some extent. And also on the macro side, we are still seeing interest rates very low. In India in particular, we might see real interest rates that are negative. But of course, with all of this comes the risk of inflation. Now, I doubt inflation will pick up that sharply over the next 12 months. But as the global economy recovers sometime mid-year, next year onwards, and interest rates remain low, at some point, we will potentially see a risk of rising inflation. So I think at the moment, of course, liquidity is plentiful and the mood is generally good. So let's hope that COVID, the pandemic, or any other geopolitical issues or any presidential election disputes in the US don't derail this.
How do you think these global developments actually impact the Indian equity markets? And specifically, Indian investors right now are facing a lot of dilemma on whether this is a good time to exit or stay, and whether in the future it's actually going to be single stock picking, which is going to be more focused. So what are your views on what's the right time to enter the markets and whether the valuations currently are too high?
Well, valuations are not that attractive, particularly because the growth estimates are all over the place and it's not clear what the growth will be. So it's actually been very difficult to also forecast reliably any growth numbers, whether it's the companies themselves or whether it's the analysts. So the valuation numbers are also all over the place, and valuations are close to previous highs if you look at the numbers that are published. But that is on the broader, on the narrow market. But if you look at the broader market, which is where the mid and the small caps, there you still find a lot more value. In selected sectors, you find a lot of value. One of the sectors that I forgot to mention was financials, and financials is a big part of markets. The financial sector has not performed as well across the globe, and financial sector valuations are actually looking much more attractive compared to the rest of the market. So we've been also seeing a shift into financial stocks across the globe and after the elections. So I think there are pockets of opportunity. There is value in the broader markets, and it's not necessarily going to be a top-down market. I think one will have to be doing a lot more deep research, bottom-up stock picking. There is obviously, as I mentioned, when you have more mid and small caps, there is a bigger opportunity set. So you have to do your homework and invest with more research. So there is money to be made, given the fact that there is a lot of liquidity and interest rates are low, and the governments have not yet started pulling the stimulus back. When you see signs of that happening, or any other risks, or the pandemic, let's say the vaccine doesn't work and you start seeing a lot more concern, then of course I think we might start worrying about the markets again. So while investors have to be mindful of the risks that are out there, I think there is also value, and if one does their homework, they can find enough opportunities to invest in.
So with that, we conclude today's session. Thanks to all our viewers, and we hope that this was an interesting session for you. Stay safe, and we should be back with another session very shortly. Meanwhile, if you have any queries or comments, feel free to write to us at contactus@incredwealth.com. Thanks so much for your insights, Punita, and for your time.
Thank you, Chavi, and we'll catch up again perhaps at the end of the year.